A stock picker's market, like, what is a stock picker's market, right? I wouldn't call a bull market a stock picker's market. I wouldn't call a bear market a stock picker's market, right? A true bull market, you should see the S&P 500 moving up in a substantial way, the Russell stocks all moving up in a substantial way, every single sector pretty much moving up in a substantial way, right? NASDAQ moving up in a substantial way with the Dow. And so a bull market, I wouldn't consider a stock picker's market because that's just everything's going up, everything's mooning, right? And we're certainly not in that market right now. Look at the performance year to date for many of these sectors. They're in their own bear markets, to be quite frank, right? Now, also, a stock picker's market is not a bear market, right? Because in a bear market, it just seems like everything is going down. You can't catch a break, right? From the long side, at least, right? So it's not really a stock picker's market. It is from like a long-term perspective, like I'm buying these stocks for the next 3, 5, 7 years. So it's a stock picker's market in that respect, but it's ultimately not a stock picker's market either, right? A market like we're in right now, which I call kind of like a kangaroo market, this is a stock picker's market, where you have these massive divergences between NASDAQ, S&P 500, Russell, Dow Jones. This is a stock picker's market. And I have news for you, okay? And so doesn't, folks like Stanley Druckenmiller, right? Legendary investor. This stock picker's market might not end anytime soon because we're going to have these moments in the market where everything looks great. It looks like all clear. The economy looks great. Inflation looks like it's coming down. Then we're going to have worries about the economy. Then we're going to have worries about inflation. And it's going to cause continued volatility in the market. We have a lot of geopolitical problems that are going to happen from time to time. That's going to cause the market to get shaky. And so this market that we've been going through for honestly probably the past 18 months now at this point in time, this is what you could be looking at for years to go in the future, to be quite frank, where there's going to be certain stocks that are doing absolutely tremendous, and they're playing their own game. They're like in their own bull market. And meanwhile, you got a massive amount of other stocks and sectors that are doing absolutely horrible. And so as a stock picker out there, you got to find where the opportunities are in the market and go ahead and pounce on those opportunities when you get those opportunities given. The stocks I was buying 6 months ago or 9 months ago are not the same stocks I'm buying today. I can tell you that much. And I can tell you the stocks I'm buying today are not going to be the same stocks 9 months from now because of how much these stocks can underperform or overperform the market. And I don't see this ending anytime soon, to be quite frank, folks. I think we're going to continue to have this where the market's shaking around and, 1 minute it's going great and the next minute it's going horrible. And I think ultimately it's going to continue to be a stock picker's market overhaul, okay? Disney now at this point in time, okay? So first thing you got to understand about Disney, Bob Iger, okay? Remember that name. This man is back leading Disney once again. Now, he did phenomenal leading this company in the past. The stock was up something like almost 400% while he was CEO of this company from about 2005 through about 2019, roughly, okay? Stock price he kicked the market's butt. This is Disney's stock price from the time he took over the company through, the time he left the company, and he killed it, man. He destroyed the S&P 500. It wasn't even close. And so, if you would put your money in Disney stock during that time period rather than in the S&P 500, you made a lot more money, and I mean a lot more money than just having your money in an S&P 500 index fund or something like that, right? So the man has a proven track record. Now, the interesting thing is, if you look back at some of his past deals over the years, I will say he got more questionable as time went on, which brings to the point of like, is he still on top of his game? Pixar, brilliant deal. They did in 2006. Marvel, obviously, that deal smashed it for them. Like Marvel, a game changer for the company, and they paid $4 billion in 2009 for that franchise. Like, oh my gosh. Talk about knocking out of the ballpark. That's one of the best acquisitions probably in history. I mean, literally in history. Like, I would put that one up there with Facebook buying Instagram. I would put that one up there with Google buying YouTube. Not quite as good as those, but dang, that's got to be a number 3 there. That is very brilliant, okay? I mean, absolutely incredible. Then they bought Lucasfilm. I think that's another smasher for $4 billion in 2012. Another great decision by them. Then I think Bob Iger made a couple questionable decisions. In 2019, he bought Fox Entertainment assets for $71 billion. Billion. I think that was a questionable buy there. and paid $27 billion plus for Hulu. I don't think those were good decisions, okay? I think these were smashing out of the ballpark, and I think these were questionable, if not bad acquisitions in regards to that, okay? So I think that leaves some element of like, you can't just say Bob Iger comeback's necessarily a slam dunk for the company, because at the end of the day, a lot of people want to put Disney's kind of failure over the past few years, they want to put it all on Bob Chapek, okay? And I'm just here to tell you that, to be quite frank, I think Bob Iger deserves just as much blame, even though he wasn't CEO, because at the end of the day, he made those questionable acquisitions and spent, $100 billion roughly on some deals there that I'm like, I don't know about those, okay? Those are very questionable, and I don't know if they're ever going to get those sorts of paybacks, in my personal opinion, okay? Now, also, Bob Iger's come back, and, he's got a big stick, okay? And he's firing people left and right. 7,000 employees have been fired from the company so far, maybe more. We'll see what happens here in regards to this, okay? In terms of their latest quarter here, revenues grew very nicely from 19.2 billion year over year, 21.8. And it's a much tougher environment to grow revenues. Obviously, they have Disney Plus, they have Hulu, and they have ESPN Plus. I think ESPN Plus is definitely an area they can grow substantially over this next few years, okay? Now, in terms of their parks business, this is another huge component of their business, right? It's growing great. Revenue's up about 17% on a year-over-year basis. Operating income up 23% on a year-over-year basis. Their parks business is smashing it always, right? And especially in this time period, coming off of Rona, people want to go back and travel. Those parks just continue to do well, and are going to do well, as far out as I can see. You can't duplicate what Disney's put together there. That's the bottom line. You can't duplicate that. You don't have the characters to make the kids care about the parks and the parents care about the parks. You can't duplicate that. The money it takes to do that, it's impossible, right? And so those parks are going to do well for basically as ever and ever, right? Now, if you look at the company's balance sheet, something a little iffy here, okay? A little iffy. So when you look at total equity, it looks great, right? Wow, $110 billion of total equity on the company. Wow, that's tremendous. But let me show you something, okay? Let me show you something very important. See this right here? This is goodwill. Goodwill, they have that listed almost $78 billion of goodwill, okay? So the bottom line is this total equity number is boosted up in an epic way because of goodwill. Now, I do believe the company has a tremendous amount of goodwill. At the end of the day, when you own brands like Marvel, and you own all those Disney characters, right? And you own Lucasfilms, and you own all these tremendous franchises, Pixar, and everything that they own, right? And you got ESPN. They truly do have a crazy amount of goodwill. But I just think it's worth mentioning that if you took that goodwill away, that balance sheet's not looking nearly as healthy, okay? And part of that is because Bob Iger did so many big deals and took on a lot of debt over time. So do keep that in mind, okay? Now, in my opinion, is Disney a great buy, okay? I think it's an okay buy. The forward P on the stock's about 21. As far as next year's number, about 16. I wouldn't expect an insane return. I think it's an okay buy. Okay buy.